Okay, good evening, guys. Welcome to the live trading clinic. My name is Steve Ruffley. Today we're going to focus on the FOMC meeting, probably one of the biggest meetings we're going to have for quite some time, I would think. Some real important decisions to be made, some proper forward guidance to be indicated, and it's just time for Janet Yellen to step up and stop playing with the markets. It's getting more than irritating now. So what I'll do is I'll go through the presentation. It only takes a couple of minutes just to go through quick risk warning. Any questions you've got on the actual data today or any thoughts you've got, let me know. Put it in the chat window. And then I'll go through some technical levels and my strategy for trading it today. So before I start, as always, risk warning. Remember that spread betting and CFD trading carry high risk for capital, resulting in losses with the huge initial deposit. The member suitable for everyone, so please ensure you fully understand the risk involved. The information is provided here in no circumstances are considered offices for events. Nothing issue contribute investment advice. The information provided after the date is produced. Education only, content of the webinars, personal moderation, not trade.com. The content is not country finance, personal tax advice. In trading comments, all set and liability. The content comes during the session. So what we're going to go today is some live charting analysis, multiple time frame trading. I'll go over a couple of products and just tell you exactly why we are where we are from a technical perspective. Fundamental analysis is all about today. It's all about what Janet Yellen's going to say, or more importantly, what she doesn't say. I'm probably going to trade this in a very different way than I have done for the majority of FOMC, Bank of England, or ECB minutes, and I'll explain that a little bit later on. I've got the account open. I always trade live money and will only trade live money. And any questions you've got, guys, do ask me. So, going through the markets right now. Okay, when we talk about old time frame trading and higher time frame trading, you have to understand what happened in the past will help us predict what's going to happen in the future. So I'm going to take gold, for instance, because this is one of my favorite charts. It's glad to go blank on a monthly view. Now, I was quoted in the Financial Times 2013, the back end, saying by early 2015, we'll be trading at $1,000. Well, I'm a lot closer than most people were. Some people were saying I'm going to be trading at $5,000. Now, there's a few reasons why in the recent kind of weeks and months, I've had a good idea that gold's going to really start to bottom out, break below 1142 is a big level, and really start to get to around that $1,000 mark. So what's happened in the past will tell you what's going to happen in the future. 8% of the time, a strong to 50%. This is a strong directional move. It retraces to 50%. That 50% then becomes an absolute key pivot point in the charts going forward. We can't get back to the higher levels, the 38.2, consistently every month. Every time we try to break higher, we close lower. One final attempt to get back up to the upper regions when we've got all the problems with Syria, Russia, the global meltdown, etc., etc. If gold was to go back to previous levels and be the true safe haven it was, it would have done it by now. So right now we're breaking below that 61.8, that key level at 1150. So really for me, there's absolutely nothing holding gold now until $1,000. So that, in layman's terms, is how you do technical analysis. You cycle through these weekly charts, you look for a high point and you sell it. A high point, you sell it. A high point, you sell it. Stop me, if you've heard this one before. But as I predicted, just in the euro, which I'll go through again, if you listen to any of my webinars, for literally the last 18 months, I've been saying sell every high in the euro. Okay, and I've said just the same in gold. So when we get to a high point, from a technical perspective, from all my fundamentals, we're going lower. Okay, so do it all the way through your daily charts. Every time this market hits some good fib levels, so it might be due a bounce here. But if we're not due a bounce on the 61.8 and go up and get back into this range here before we go back down, then we're going to see a very aggressive move because this level of support is now acting as resistance depending on what happens today on this close. So that's great. Great chart. Love it. You can't really go wrong with starting off in a higher time frame and moving down. So on the hourlies, really, we've just seen, again, the same scenario, every high moving down. So this spike yesterday, not quite sure what that was, but that was just a license to sell into this spike and print money. The market really came back down to the 50% pretty much, immediately. So very, very good trading there. Again, we've tried to push up high before these Fed minutes. And, every time we have, gold's looking weak. So depending on what Janet Yellen says, what she doesn't say today, gold's going to be moving. That is for sure. I'll give you an idea of the direction and what I'm going to do in a little bit. Going back to the euro dollar, same picture. Okay, this is just like a car crash TV. Okay, we've seen 1, 2, 3, 4, 5, 6, 7, 8, 9 months of selling. You don't get to see that very often on a chart because generally how charts work, there's profit taking. There's people taking the opposite position to try and get some cheap money. No one's finding cheap euros just yet. So exactly the same scenario. What goes up will come down. Started the rally, early 2002. Was 50%. Here it is. So once we broke that 50%, that's when the market really started to sell off. And technically, the 61.8 was another pivot point, another change. Market's going to go down. So 1.0 parity is where the market is expecting. 0.85 could be where the market ends up. I don't know. I mean, it's really kind of difficult now to tell you where the money is selling it, because lower high, lower high, lower high, big break. That 50% has acted as perfect. Yeah, pretty much perfect support. Okay, for a long time. Once it broke it, we're not looking back. So obviously, with that amount of selling on the monthly candles, we're going to see at least one green candle. But what that's going to be, I don't know. The money's been made way back here. For almost the 2 years I've been telling you to sell every high. And again, you go through your weeklies, okay, dailies, and you see how the market is telling you every high point, sell, high point, sell. You don't have to make, thousands and thousands of ticks out of this. You can make a couple of hundred ticks each week out of it, and, make good money. Trading's about being right at the right time. It's not having the right opinion. Just because I said the euro was going to go down before anybody else that I was aware of, then, it doesn't really matter, does it? It's not about being right, it's about making money. And that's what I'm here to do today. So there we have gold, and there we have the euro dollar. As I said, I'm going to trade this in a slightly different way today. I don't really know how the market's going to react. And that's not just kind of sitting on the fence. I literally got no idea how they're going to react to this statement. We don't have anything really to go off today. I mean, we're doing some research, over the last week or so and putting some notes down. And essentially, what we're waiting for is this word patience to be taken out. But I mean, patience with the markets, patience with Janet Yellen, we're all losing it. And this patience really isn't proper forward guidance. Now, I've listened to these statements from masters like Jean-Claude Trichet and, real people that you can respect. I don't really feel like I'm getting an affinity with Janet Yellen, to be honest. She's no Ben Bernanke, and she's starting to annoy me. Like many other people in the markets, you can't play with the markets. Now, the market's already tipped the hat, and they know what's going to happen. How do they know? Well, you look at the pound. I was 95% sure the pound was going to considerably rally, because I thought interest rates were going to go up first in the UK. Now, again, something I've said for a long time, but really after the last kind of few weeks of the Fed talking, I had to change that opinion. And again, I can be wrong. So in this instance, I was wrong. I thought after the 7 months of selling, we were going to see the pound bounce back to 1.64 because interest rates were likely to rise just in the UK more than the US. But be it the election, be it the worry of the housing market, personal debt, whatever, it looks like the US are going to move. So we saw that inevitable 7 months of selling, green month, like I said, we're going to see in the euro, and then we broke the lows and we're continuing down. So really now, today, unless Janet Yellen says firmly they're not moving interest rates till 2016 or Q4 2015, then we're not going to see any bounce in the pound now. We've seen it profit taking. We're continuing down. So the pound's going to go to these new lows down here, probably down further to here, I would expect. Maybe the pound to get as low as 1.25. So a lot of downside room in the pound now, because we've seen the selling, we've seen the profit taking, and the selling's now going to resume. And again, I don't know why Janet Yellen's playing chicken with the markets. I don't know what the US has got to gain from a strong dollar. But by saying that they're going to move first on rates, people are piling into the dollar and getting out of every other currency. That's why we've seen the dollar strength. So the reason why I'm going to trade this slightly differently is I'm going to trade it purely technically today, okay? So I'm going to hunt for value. I'm not going to start reading out what I think statement. I'm not going to tell you what I think opinion-wise, because it just isn't enough to go off, right? Here are the facts. The expectation is within the market that we're going to move on interest rates in the US in Q3 2015. That's what the market expects. Anything outside of that is something new, yeah? So the line we're looking for is the FOMC is going to judge that it can be patient to normalize the stance of monetary policy. That is it. All we're looking for is that word patient to be left out. Okay? That's not enough for me to listen to what's coming out, to all the comments, and make an informed decision. I'm just going to look on these 8 products today and find some value. I'm going to tell you when things are overbought, when they're oversold, when they're on a key fundamental or technical level, and I'm going to buy and I'm going to sell. And that's what I'm going to do today. Yeah, I'm going to make money. Because I had an opinion on the non-farm payroll, and it cost me dearly. I nearly lost £5,000, kept to my conviction, lost about £1,600. Absolutely fine. Not many people tell you about the losses they take, but yes, I took a non-farm payroll hit, and it was a hefty one. In the 47 non-farm payrolls I've ever traded, that's my 3rd ever loss. Didn't trade the Monday after, made half the money back on the Tuesday, and I've just jobbed away and made the rest of the money back. Okay, that's how trading is done. You have to take a hit now and again. But when you see the non-farm payrolls come out the fourth time consecutively higher, and why would you sell the S&P? I could only do what I thought was right through my vast experience, and I took a hit. But it was nowhere near the hit I could have done, and you know what? I'll take that on the chin. So what else we know is the unemployment rate is at 5.5 within means. Inflation stable at 1.6. And another great non-farm payrolls and a positive ISM manufacturing. The only thing is we're looking for lower GDP expectations. That's the only reason I can think they wouldn't want to normalise when they are now. So right now, all it is about is understanding, what the market's trying to achieve. Okay, so from today, the market's trying to achieve some paritism value of what's going to happen in the days, weeks, and months after what's said today. Janet Yellen is probably going to move away that patience, but does that mean that we're going to have a June rate hike? Or does it mean, as the market expects, we're going to have a Q3 rate hike? Or does it leave the door open for more interpretation? This is what we're trying to find out. Okay, so in all the markets we're looking at today, the DAX is probably the one I'll probably focus on the least. Gold, again, depending on the market takes it, how the view of inflation is, how the view of these interest rates and how quick they're going to go up are, then we could see the people move out of out of gold into cash. So lower levels, 143 is massive in gold. The dollar, we've seen these low points. It's selling all this morning. It was already rebounded off the lows. The euro, no matter what happens, is going to get smashed. It's going to go down probably. But we'll probably focus less on the dollar, euro-dollar right now, I would say. S&P 500, anybody's guess. After the non-farm payroll, anybody's guess. Be very wary of that. The UK wants to hit 7,000. We're 46 points away from that, so that could be something to keep an eye on. And apart from that, the pound versus the dollar, as I've said, I'm expecting a lot of weakness in the pound now anyway, so good selling opportunities. All right, guys, so we've got 3 minutes before the figure now. So as I said, what I'm going to do, I make no apologies. I speak very, very quickly, and I trade quickly, and I'm going to shout a lot of things out. I'm going to say a lot of things. We're not going to get drawn into this today, okay? I have nothing to prove by trying to make, vast amounts of money today. What I'm trying to do is let you find out where value is. We're going to analyse as quick as we can what comes out of the Fed, what comes out of Janet Yellen, what's said, what's not said. But I don't really think that's key. The market is going to do now what they're going to do, because it's either going to be the long-term buyers and sellers getting involved now, or people getting out of profits. The market is going to be fairly unreliable, I would say. So it's almost like topsy-turvy, kind of opposite land. Good news could be bad news could be good news. The fact is that if QE has stopped, which we know, and we're now moving into normalization, then if interest rates go up, that's generally seen as bad. But with all these years, these 7-8 years of low interest rates, if interest rates are finally ready to go up and normalize, that could actually be good. Okay, so it's not as clear cut in any stretch of the imagination. There is no good or bad news here. There's just clarification or speculation on this forward guidance. Okay, so that's what we're looking for right now. We're looking for value. So we're going to listen to the squawk, and we'll listen to as much as I can, try and anticipate as much as I can what the market is thinking by these comments, and then we're going to hunt out value. Okay, just going to try and make some money. That's what I'm trying to do today. Yeah, not try and be too clever. Just try and make some money in one of these 8 products. Maybe I'll trade a few at the same time. Doesn't matter. I'm going to speak quickly. Like I said, I make no apology from this. There's going to be a lot said, and it's going to be volatile. Probably more volatile than a non-farm payroll. So strap yourselves in, guys. Don't trade too much size. Don't get too greedy. Don't be too ambitious. Let's look for the the key reversals, the key extension points, and let's just try and make some money. All right, guys. A minute. Minute to the hour, guys. Minute to the hour. Now's the time to be getting in that zone, getting some idea of what you think might potentially happen. If you see gold spike up, can we see good levels to quickly sell? Now, again, trading off spread betting platforms, we're liable to slow down, so be very careful trading just after this data is released into the market. We're not expecting anything major from the start. It's just from when we hear what's going to be said, in the coming minutes. All right, guys, 30 seconds. Let's get ready. 10 seconds. Okay, watch the markets. Watch for any preempt. Okay, gap in the S&P. Short patient stance. Okay, watch that gap in the S&P. Very, very bullish S&P. Close the gap. Okay, upwards revision in the GDP. Okay, drop the patience phrase. So big levels coming up in the S&P. So as expected, market taking this positively, but gold's also up. Look for some high points in gold if the S&P is taking this positively. Very strong in the S&P now. Big level up here to sell in the S&P. Whoa, watch the euro dollar. Euro dollar spiking on the back of this. Watch the euro dollar now. No real levels in the euro dollar, so just be very careful. Some upper levels being hit in the S&P. Again, keep one eye on gold, because gold really should be coming down if all the market's taking this positively. Watch for the FTSE looking to make new highs. Again, markets now. Dollar yen hitting lows. Okay, 120.284 could be a low point in the dollar yen. So again, market's taking this very kind of differently, to be honest. Gold's rising, S&P's rising, dollar's falling. Not natural correlations, as I rightly said. You know, a bit of upside down land here today, so be very careful getting involved just yet. Economic growth is moderated. Weak exports growth, though. Okay, watch this high point spike in the S&P. Could be a sell point just this 100% level up here, this previous high. Okay, so gold now starting to reverse. Yeah, sell some gold. Gonna sell some gold. Okay, euro's just coming back off of them highs. S&P again. Look, S&P. Slow the pace of rate rise expectations. What they said. Slow the rate of rate high expectation. Okay. I can't trade. I can't trade in straight over here. Try and sell some S&P on that level. Okay, so that high point in the S&P's been hit, so we'll go looking to short the S&P up there. Okay, so it looks like the rate expectations have been shifted around yet again, but no real clarity there. So we're short the S&P for upper level, just broke it through again. So again, wouldn't see any resistance here until 2092 spot 80. Sell some more S&P up here. I don't think that's any reason to stay there for too long. Okay, so euro is still looking fairly strong against the dollar here. On the lows of the dollar yen, again, a nice daily level down at this point just here at 120.472. Again, remaining very strong in this S&P just still. FTSE starting to tag along now, so the FTSE could get to 7,000 as we anticipated earlier on today in some of my tweets. Big spike again in the S&P. So again, S&P taking this very positively. Again, we're positive in the Swiss, positive in the DAX. Gold, again, is still high. No idea why gold's going to remain that high. Okay, so going to sell a bit more S&P up here, just try and average in a little bit more, try and be a bit more aggressive. Gold's going to start reversing now, back from that 1159 spot 10 level. Okay, so just going to have to manage these positions a little bit wild in the markets just now. Very difficult to get filled at the right points here, to be honest. I find it very difficult to get in and also out of trades. It's coming very slow. So just average down that high point up there. So just could do the coming back to the 208, 410 round there and thereabouts. Okay, so just got out of that position, just had to average in to the upper point in the S&P. That was fine, just taking a few £100 profit there. So watch for it to bounce this level just down here. Euro dollar's up far too high. Don't really want to start selling the euro dollar just now because I didn't want to kind of focus on that too much. But gold for me, don't understand why gold is up so high. So if we hold below the 50%, 116, 1.45, 1159 spot 10 should be a low point. So again, just an idea where you've got to be kind of very cautious of your levels. We didn't hit 2092 spot 80, so I was happy to sell more at the top here and get back to my original entry point here of trying to sell here. Sometimes you've got to average in and take on that pain. We're only talking, small amounts of pain, small amounts of time. 60 ticks when we spiked 160 ticks. There's a lot of value up there to be selling in the market. Okay, so we got out for profit. Could have really held on, I guess, for a little bit longer. So gold again hitting these upper levels. Really not getting any more follow through in the FTSE just yet, but we're going to hit 7,000, I would say today. Well, I mean, again, removing that patience is very, very important. But it just sounds like some of them, the median estimates are that, the Fed. I'm trying to read through some of these comments just now. Yeah, I mean, we're looking to cut the medium FFR estimate almost by half. So the markets are taking that very positively. So watch gold here, Okay, gold's getting to that 50%. If you get to these upper levels, 116, they're going to start selling some gold. S&P is coming back down now. Now 50%. Want to see this? It kind of gain some momentum and punch through. But 116810 would be about a high in gold. But any of these red levels up here, these red lines, would be a good place to short gold. So let's just see if it gains that forward bit of momentum still. Just holding back on the indices now, just coming a little bit lower. Gold, is very, very directional, very, very powerful, and it punches through these levels. So, we've got to be quick. No, it looks too strong. So I'm waiting for the second red level before I sell it. And then maybe just average into that daily level at 16810. So getting a little bit of strength back in that S&P now. So you see how the levels are working. Yeah, that red level is a definite target in gold. Euro is coming back to the red levels, down at 106.535. We're coming back on the pound for a little bit. So just watch these upper levels in gold. Spot 8 extension. Okay, so looking to make new highs in the Swiss. We're tantalisingly close on that 7,000 in the FTSE. DAX really has done nothing, which, like we said, it's back towards these upper fib levels. But as we said, we're going to stay clear of that. So above that daily level now in gold, So I'm not going to sell that, to be honest, because I can't seem to get filled at the right price. I'm just going to hold on. But if gold does continue to rally, then we've got another 130 ticks before it finds any major resistance. So if you want to buy into gold, by all means, I'm not going to. So I'll be 140 ticks. We'll actually move 260 ticks on the back of that gold. So that would be, again, either a very aggressive short squeeze or, from what's been said, gold's going to come back in vogue, but I just can't see it personally. Already back towards the highs in the S&P now. So the S&P's got a big, big level, 2092 spot 80. So let's see how the market reacts above that. Above that, we've got this 161 spot 8 Fibonacci level, and that'll mean, again, some big, big moves. We're seeing 260 ticks on the high side and 450 ticks on the upside in the S&P. So for an hourly range, these are absolutely huge moves, guys. Huge, huge moves. And like I said, much, much bigger than you find in the non-farm payrolls. This is the effect of the non-farm payroll. So really, it seems that whatever Janet Yellen says, she's going to move on the rates, but it just doesn't seem it's going to be yet. Okay, that's what I'm reading from this. It says Fed drops the patient when it comes to interest rate hikes. But it says April rates unlikely and reasonable confident that inflation will move back to 2% target. Officials forecast a slower pace of future rate hikes. So, I mean, we could have a rate hike in the third quarter, as the market expected, but it's not going to be as aggressive as maybe as everybody once thought. And that's why the S&P is taking this so positively, that it's basically some more kind of free money for people to invest in the stock markets and not to put in the bank and gain interest on. So that's really why, as I said, there was too much coming through the markets and too much kind of speculation about this patient word being removed. The patient word was removed as we thought, but it's people anticipating now that the recovery is going to be balanced, but also interest rates are not going to move as quickly and as aggressively as once thought. And that's why I don't understand why gold's done the spike on that, to be honest. I think it's just probably to get people out of the spike. We should have really sold at that higher level up there. We could have made 20, 30 ticks or so. But, all the stock markets are positive. So, really, gold's positive as well. You've got to stay away from it because it just is too much of a dangerous market to trade. So, again, we've seen the pound going stronger on this view that rate hikes are going to be slower. So if they're slower, that gives the UK time to catch up. So that means there's low monthlies that we've seen with some value down here. So people think that if the US is not going to be aggressive on hiking rates, then the pound could come back in vogue. And we've got bags of value in all these red candles to buy back. So that's how people are, firming their opinion now. But really, if you've got that for the back of patience, then to be honest, you're a better fundamental trader than I am. I saw some value. I got in, got out quickly. We only made 123 quid. That's not bad for a couple of seconds work. So again, the market's looking to recover and go up now. But I was trading this purely technical, looking for oversold, overbought periods, looking for value, and just trying to trust the levels. If something moves, as we did here, in a straight line, 213 ticks, you can get a 20, 30 tick bounce. That's just how markets move, right? So we're back up to these upper levels in gold. And as I said, if we carry on in gold, 1180 could be where the market kind of looks to settle. No real kind of reaction now in the DAX and the FTSE. They've really calmed down. The Swiss is away from the highs. So I think really now, looking forward, it's trying to see what gold does. It either goes up to 1180 or reverse back down to 147, 142. The S&P, I guess, it's had every opportunity to go lower, but that should probably break this 2090 spot 80 level and head towards 2110. Why wouldn't it? Again, the trend of the markets for indices is massively bullish right now. So I'd say pound, there's some value. There's no real value in buying the S&P just yet. What I would do is go into that first 15-minute spike and do a Fibonacci. So spike, we gapped up, so I'd just take this single Fibonacci here. So what I would say is we either get down to 2079 spot 38 in the S&P, and then perhaps go back up. Or if we get down to these lower levels, I would say we're going to remain very aggressive. If we just test back down to 2085 spot 65, we could continue to make new highs. So that'd be another 3 minutes time. So new highs in the euro yet again. Let's try and find out if we can see some good value point in the euro. So flick back onto the dailies. So potentially 108.463 could be a point of attraction. If we look on the hourlies, then I would say probably the only thing I could do is a Fibonacci expansion. I would say the up move started here to where the data was previously. No, that looks really good, to be honest. I'd say probably that's the only thing you can aim for. So 161 spot 8 expansion would be 1 spot 07684. Could be a point where the market finds significant resistance in the euro dollar. But like I said, that's a much bigger reaction than I thought. And it's typical, isn't it? I say that the euro dollar I'm going to stay away from, and that again has been one of the biggest movers. But that's just trading, isn't it? We jumped in the S&P because we were near some top levels. We could have made some money in gold, but just didn't feel right, to be honest. And sometimes if it doesn't feel right, you've got to stay out. So again, looking strong in this pound versus the dollar now. As I said, this leaves the door open for the UK to move on rates and catch up. So all that 7 months of selling that we saw in the pound versus the dollar in cable could soon be broken. So back to the highs in gold, back to the highs in S&P. So. Okay, so we're pretty much 2 minutes away from the first technical close in the 15-minute. So let's do the same for the euro dollar. So let's get our Fibonacci on that. Let's just assume that's going to be the high and the low. So we can see where the market could potentially go now. Again, we're looking for any kind of pullback and continuation or serious reversal. So it looks like we're going to make new highs in the S&P. We've only got a minute to go. Probably new highs in the euro dollar. Gold, gold's such a difficult market to trade on these things. But we'll do our Fibonacci and see if we can glean a bit of insight. Again, wouldn't have liked to be long or short into gold, to be honest. But I don't really think gold's got the legs to stand up here, to be honest. But what do I know? So, okay, just hitting them highs now. So that level I said in the S&P, we're just hovering on it now. So, again, my levels always work, 2092.80. The market has to find support and resistance in these key areas. So, again, 107.684. Again, open above on gold now, open up the key level, just below the key level in the US, in the S&P, just above it in the euro dollar. Okay, still looking green across the board. And I would say I'm going to stay away from the pound versus the dollar, but plenty of opportunities to short-term sell above the hourly Bollinger Bands up here. So gold again, looking for these higher levels. Yeah, 1184. That we could absolutely get to that. But see how we react on these inner Fibonacci's now. This is what the market's going to tell us. We're outside the Fibonacci's on the euro dollar. and we're outside the Fibonacci's and already made a new high on the S&P. So that could mean a quick spike up or a quick spike and reversal. The same with euro dollar. I would say we haven't made a new high in gold, so we're going to have to test the 23.6, 38.2, or really the key 161. 1161 spot 59 in gold. We did that, we're going to get an idea of what gold's going to do. It's either going to bounce, make new highs, or break and completely retrace that entire gold move. And for me, difficult one to say. I'm bearish gold, but you know, you're a brave man if you kind of pick out what these markets are going to do. You know. So still looking for selling opportunities in that euro dollar. Again, let's just try and trade small around 107,684. Get a quick 10, 15 tick, 20 tick bounce. Got resistance points now in gold. So resistance points, you know, here at 117231 and here at 117723. So if you're long gold, that's where your target should be to get out. So euro dollar again, this is just a Fibonacci expansion point. So not the greatest indicator of what to do. So might start selling some gold at that 172 spot 60. As I said, gold's been quite difficult to get filled on, to be honest. So I'm not holding out a great deal of hope. Still think FTSE's going to hit 7,000. As I've said, I don't know, I get tired of how long I've said these for, but I said in a tweet earlier today that I believe FTSE was going to get 7,000 on positive FOMC, and you know we're too close now. So we should, if you see the S&P continue to hold these highs, see the FTSE make some new highs. I mean, the whole point is now we're looking for a pullback or continuation. I mean, basically the whole entire market is expecting, the market to move from Q3, and it is. You know, Q3 is going to be the trigger. But if it's not going to be aggressive as we think, then it's not, reason for people to start bailing out of gold and, bailing back into the dollar. And that's why we've seen, the removing of this word patience is not what's triggered the market. It's what's been said afterwards. It's that basically people don't think, or the Fed don't think, that growth will be as bad, and they don't think that they're going to have to aggressively move on rates as once was thought. So it means that we all know everything in the game now. We all understand what has been said. Patience has been dropped. Q3 is the most likely rate hike, but it's not going to be rate hike every meeting. And that's why we've seen this positive reaction in the stocks. And I still don't really understand. I mean, again, maybe based on inflation, maybe it's a short squeeze. I don't know. I don't really think gold should be up to these high levels, and gold is on these low volumes very easy to manipulate, especially from the long side. So maybe gold's just going to hover around the highs and then overnight sell off aggressively. But S&P, again, we could get to these all-time highs. Again, before that, we've got the 161 spot 8 retracement point. Getting to the highs, 50% in cable, so good levels to continue the break up. Again, I mean, we're trying to, everything's green pretty much, so it's quite difficult, isn't it, to know what to do. There's only really the the dollar yen, that's taking this negatively. The rest of the markets are green, which is quite unusual because we should be inversely correlated with these things. Swiss, off now, is taking a massive bid. Swiss is it's off. So again, Swiss obviously taking this very, very positively. Look at that. From the Swiss removing their peg with the euro, this big drop we saw on the SMI. We've seen 1, 2, 3, 4, 5, 6, 7, 8 months of buying it back. Absolute fortunes to be made. And again, going on to make new highs, maybe trying to get back to 10,000. So the value of knowing your upper levels, though. 7,000 in the FTSE. It has to be inevitable, guys. Has to be, and I've been saying this for so long. There we are. So, will the FTSE reach 7,000 today? As I said, yes, it will. Yes, it will. So, there we go. I mean, really, it's funny, isn't it? All these markets going up, and I made my money by in a few small seconds selling the top of the S&P and getting out of the value area. So, just goes to show there's more than one way to make money in these markets. So, to be honest, I wasn't ever going to trade this for any length of period of time. I was never going to hold any kind of view. And I said this from the start. I didn't want to get into a situation with non-farm payrolls that was fighting against the markets. So what I did is I looked for value areas in the markets that I know, got in, got out, made some money. All right, it's only 123 quid, but in 3 minutes work, that's more than a lot of people earn, okay? So there we go. That's making money real time. That's how you trade intraday. That's how you make money off markets, trading technically, even when we've got a fundamental driver. So, again, still struggling with the DAX to move higher, and really I think of all markets, the euro could be the one where people see the most value. So people will start selling the euro because there's this big downtrend, and then the market will just continuing to buy back. So if we don't see a bounce from this fib, then, again, we could quite easily get to 1084, spot 63. It's basically, saying to the markets that we are going to move on interest rates, and they are going to be slower than expected. So that means that all this speculation buying into the dollar for that strength and that good return on your money, it's not going to be around for that much longer. So, it's just taking that out of the market for the short term. So against this high, I'm going to sell some pound here, sorry. I'm going to sell some pound. Some pound against the dollar, just to this high point here. Okay, so just didn't catch that out of the corner of my eye. So excessively dovish is what the market's taking that as. So that's why we're seeing this this strong move in the in everything that's not kind of with a dollar in mind. So the FOMC is yet to meet its target with employment, and that's one of the main reasons. The economy is going to move slightly slower, so that means the aggressiveness of the rate hike isn't going to be as strong. So I guess the uncertainty maybe is why gold is having a spike here. But again, you wouldn't expect the S&P and gold to spike and prolonged stay this aggressive. So again, moving up in the pound versus the dollar now. Again, this is, like I said, it's almost like confirmation that the market can aggressively buy everything that's not dollar based now and go against what has been actually said. Okay. Okay, so high points yet again in gold. S&P stalling towards the highs. DAX taking no notice. SMI very, very bullish. FTSE yet again not being able to get to the 7,000 mark. A big level down here, as I said before, in the dollar versus the Japanese yen. So a big target at 120, spot 275. So back now in the pound. So DAX not really taking any major notice at all. As I said, SMI is back up them lows now. FTSE failed to reach 7,000, but it's not over yet. Okay, looking for some pullback in the pound versus the dollar now. It's just sold towards some of them highs. Euro dollar's pulling away from the highs as well, and levels we mentioned. So basically, what we've seen in the markets right now is that absolute, age-old example that everything that was known was known. We've told what we're expecting, and the markets, still did whatever they wanted. Basically, it's rate hike is coming, but it's not going to be as aggressive as we thought. Growth and everything is stable, so it's pretty much status quo. Status quo. We've got to get involved, and that's what the markets are saying. It's status quo for the time being. That interest rates are going to go up, but it's not going to be anything overly aggressive. Okay. So just looking for the pound to get back to these lower levels, just back at 148.650. I want to see this big profit being taken, these chunks. That's what you just don't see when you're on the, when you're going against the market. You just want to see that big profit being taken. So bouncing off near them lows, didn't quite get to the lows, did we, in the dollar Japanese yen? Moving away from the highs in gold, going negative in the S&P, away from the highs in the euro dollar, getting to these lower levels in the pound now. Q3, that was priced in. That was what the markets had expected for quite some months now. But the rate hikes are not going to be as aggressive as people thought. Now, this is an example of being able to buy and sell at levels and having that instinct to be able to get in and go against the market. So, again, I've only made 250 quid today. No, sorry, £225.70. So, is the account, okay, not making it up. Yeah, statement. So, unlike most other traders out there, I'm doing what I say, so I'm not getting involved in the markets unless I know what's going on. I'm patient, I wait, and we make some money. So last 24 hours, search, so profit there, took a bit of a hit. So 300, 200, and yeah, £22, £222. Right. So there we go. That's how you get £222 in half an hour's work. So coming away from the highs in gold, I don't think the highs in gold are going to be held on for too long. We're obviously going to see some natural corrections in the S&P, so I'd definitely expect to get back to 285.65. Good levels to sell. Really could have held on to that pound for quite some time, I think, in that. But, again, we're just selling into that initial spike. I kept on the hourlies, to really like this Fibonacci that I saw this morning. So, again, push through. And the market knows the tolerance, and it knows what you're going to do. So it shakes you out for 32 ticks, and now it's going to move down. So that's just how the markets work. But he didn't get 7,000. Immensely disappointing, but, kind of everything. It'll probably hit it tomorrow when the market's open. SMI had a big spike. DAX done nothing, looking a little bit negative now. So really now it's the fallout. It's profit-taking, waiting for what Janet Yellen says, waiting to see what comes from the minutes. And really all the big money has been made by the institutions in the last half an hour. So it's probably best to take stock and see what the markets have to offer you. All right, guys, any final questions, any final thoughts before I round that up? Okay, well, someone's made tons of beautiful pips in the past 10 minutes. That's good. That's what we like to hear. That's why we're all here today, guys. It's not about being right, is it? It's about being the one that has some money in their account at the end of the trading session. So again, that pivot point, that really strong daily level at 1167.30 in gold. Keep an eye on that because we could see some retracements back to 1161.59. If we don't hit 2085.65, S&P goes on to make new highs. Pounds hovering against them levels, and I said I get back to 1.48551. So not entirely sure where the value is in the pound right now. I'll probably wait overnight to see where that is, to be honest. And then again, the UK 100. If we continue making new highs in the S&P, don't be surprised if the FTSE bobs above 7,000 and continues to have a little rally in the morning. Any final thoughts, guys? Any final questions? Like I said, quick session, quick fire, lots being done. This is a prime example of my 80-20. Markets will move 80% of the time through technical analysis and support and resistance, 20% of the time due to fundamental news, but fundamentals will still trade technically. So these are technical levels up here. These are where we're trading around. The market's got manipulated and pushed around due to low volume and high volatility, and that's what makes markets spike through. So you've got to put some tolerance into your levels. And all my levels are good. I've got the confidence in my levels. I've got the confidence in selling into strength, buying into weakness. Two examples of a strong bull market, okay, that took this news well and made money. Strong bull market, sold it, made money. Okay, more than one way to skin a cat. 225 quid made today in just over 25 minutes. And if that's not good enough for people, then I don't know what is. All right, listen, guys, that's pretty much my time. I know there's other webinars coming up and other people speaking. Follow my I've been concentrating on the FOMC and the Bank of England because interest rates are going to be in vogue. As I've said for too long now, that inflation data is be back in focus because the growth is not really having the effect on the market it did. Nobody cares about the non-farm payroll anymore. We saw from the S&P, non-farm payroll was good, market went down. So it's all about interest rates now. It's all what's going to happen to people's mortgages, people's personal debt. That's what it's all about now. Interest rates are going to go up in the US. We knew that, and it's pretty much nailed on for Q3, but it's not going to be as aggressive as we thought. What it does mean is that once the US put their interest rates up, so will the UK at some point. So as I've always said, interest rates go up in the UK after the election, some point Q3, Q4, and I don't know if we'll be as lenient as the Fed. I think our interest rates have to go up quicker to really stamp out this housing bubble that we're seeing in London. So nothing final, guys? Nothing you'd like to ask? Again, if you want a better demonstration of making money with, with technical and fundamental analysis, I don't know how to do it really. It's tough, it's fast-paced, but, the opportunities are there. This isn't for holding long-term positions. I'm sure there'll be people putting out that they will long the S&P and, whatever before the announcement was made. That's fine. That's not the way I trade. I trade for very small amounts of time. The trades I held were for very, very short periods of time, very short periods, 4 or 5 minutes at a time, money, and that's what the volatility and volume in the markets gives you. No problem. Well, I'm glad you enjoyed it, guys. I'd like to thank FX Street for our continued work together. And anything else you want to know, guys, get me on Twitter at Steve Ruffley. I'll be putting some tweets out and ask me anything you want. All right, guys, been an absolute pleasure, and feel free to get me on Twitter anytime for the next half an hour. All right, guys, have a great evening. Thank you.